Hey everyone, Ivan Delgado here, MyStats commentator at Globe Prime Brokerage Firm. In this video, I'm going to be outlining the study of cycle analysis. I find this to be a very important topic that I haven't really touched on in the past. And the ultimate goal here is that hopefully you open your eyes to how important this can be to make better informed decisions. Now, the truth is that in the past, I have not bothered with time-based analysis, not because I do not believe in the rhythm patterns of the market, but it's more about the cumbersome and difficulties and how time-consuming it is to conduct this time-based analysis. It is a very data-driven effort, and I simply had to make a choice as to whether or not I want to be spending the time. But that has changed in recent months, and the reason being is because Lars Bonthinen, he is the founder of a website. He developed a software called Cycle Scanner. This is a software that, as part of his website, whentotrade.com, has made things a lot easier for me, and I must say that I've started to incorporate time-based cycle analysis as part of my tools to make, as I said, better informed calls. All right, now let me quote Lars here. He says that knowing how to use cyclical analysis should be part of any serious trading approach and can increase the probability of successful strategies. Because if a rhythmic oscillation is fairly regular and lasts for a sufficient long time, it cannot be the result of chance, and the more predictable that it becomes. There's often a lack of simple, user-friendly applications to put this theory into practice, and that is precisely why in the past I was reluctant to actually dive into cycle analysis. But as I said, there's been an inflection point the moment that I met Lars and his state-of-the-art software called Cycle Scanner. Now, let me explain how this works. So essentially, as part of any cycle, there are going to be three main factors that we want to be accounting for, and this is going to be essentially, this exhibit is going to summarize all relevant elements of factors that are going to be related to a perfect sine wave cycle. Okay, so as you can see, we're going to have the factor of amplitude, and that essentially is going to be telling us the distance between the trough and the peak. We're going to have the element or parameter of phase, and that essentially is going to be turning where we at in the stage of this flows of cycles. So the closer that we get to this inflection point, the phase factor is going to portray a specific number, and then we have the length. So essentially the length is going to be the amplitude of this movement, and that gets to be then divided by how long it took. Okay, so if we have a high or a very extended movement, in other words, a very strong amplitude, and that is combined with the time period that it took to get from the trough to the peak, a short period of time, that obviously would be very positive and would be portraying a lot of strength because of that velocity, that acceleration from one trough to the next inflection point, to the next peak. Okay, so that is how we interpret the different parameters of a perfect sine wave cycle. Now, the logic is as follows. Let me just go back to the findings of this chart. Today I'm going to be centering my attention around the Nasdaq 100. Okay, now the calculation logic that I use is as follows. Notice that whenever we have a set of data, as in this case the Nasdaq, we're going to be presented with the following information: length, amplitude, strength, and bar tail. Bar tail essentially is the accuracy of previous turning points. So if we have a very high Bartel, that tells us that on a 321 period, whenever we are suggested based on this period, based on this length I should say, that the market is about to turn around, in 85.23% of the cases there is accurate. So this is a very high rate of accuracy, 85. Same goes for 89. Whenever we have a length of 164 days that completes, in 89% of the times, that is going to be nailing that bottom or that top. All right, so this is how I calculate and how I go about it. And let me first of all get out of the way that there is no such thing as true objectiveness. While there is no real fixed approach to the selection of market rhythms through these time-based cycles, personally myself, I tend to add more weight to lengthier periods, as these are the ones that really validate and corroborate the long-term dominant cycles. So length is going to be a very important factor for me to consider. Any period or length that goes below 50, I gotta say that may unnecessarily add noise, and we want to stay away from it. We want to really focus on the main cycles at play. That's why I've highlighted here as part of the Nasdaq 321, 164 and 126. Now I then combine these large length cycles or periods with the ones that exhibit the highest amplitude. So you can tell here that we have 321, 164 and 126, and these are all, for the most part, these are also going to be the ones that carry the highest amplitude, the strongest amplitude, if you will, because of obviously we give more chances of these movements to play out given the period that has been assigned right here. Now what I'm doing next is I'm going to be picking 1, 2, 3 of these lengths based on the combination of length, amplitude, Bartel. That's going to be a very important factor to also consider. And then I'm coming up with a composite. And this is a composite that gets to be here depicted through a magenta line. And I really want to match as closely as possible the peaks and the troughs of the price data that is being presented to me over the last year or so. In the majority of times, I'd say over 80 to 90%, I end up finding a combination of different lengths that is going to be matching very nicely the peaks and troughs. Okay, now if a sufficient in sample over the last year or so that sees these peaks and troughs match nicely is found, then I'm done and I detect this as the dominant cycle. That's the Goldilocks scenario. If not, then I play around with different combinations until I find one that with the high enough amplitude is going to provide a reading that eventually gets me this composite curve as close as possible to the recent peaks and valleys, and that will become my default dominant cycle. So as you can tell, it is a very scientifically driven approach based on statistics and mathematics here. Okay, now the next thing that I want to present to you is an analysis, a trade that was performed here in the Nasdaq 100. We're looking at the combination of the 8-hour alongside the daily, and this is actually what I posted in the Global Prime mentor room. Let me read that for you so you can see here. This is a post that was presented to the participants of our room on May the 24th. Today is May the 26th, so 48 hours ago. Okay, so I'm gonna be moving this to the sidelines and we'll be reading that for you. And essentially what I said, and this was, let me just highlight that for you, this was the point that at the point in time when my analysis and trading opportunity that was outlined was shared with the room. and I said that the Nasdaq Composite is starting to look more constructive as a new week starts. And I started to then decode the different categories that allow me to make a better informed decision to analyze first obviously the context and then decide whether or not it's worth pulling the trigger. So first off, the structures in the daily and the 8-hour time frame, which is going to be looking at session by session flows, had turned clearly bullish, and that is portrayed through the FT or fractal indicator. Now up next we had the momentum, and the momentum gets to be derived of the 13-period moving average, and that is portrayed through this bottom windows, the SMT. And the SMT, which refers to small money tracker, is just essentially a fancy or sexy term to really suggest or indicate that we are after and want to be piggybacking the one side of the market that is going to be more often than not right on the directional bias. So the momentum derived of this 13-period moving average had also signaled that the bears were no longer in control, and this was, as I said, depicted through this green color. Okay, now we also had to reconcile that the daily momentum at that point had not yet turned but was about to turn, and it did happen right there on that candle that got highlighted. Now something else that it is hugely relevant is that the most relevant support and resistance area had been cleared. The one that had been acting as a really tough nut to crack. Notice that if we drag down further back, you'll notice that this market had broken with determination and finding acceptance for a number of candles beyond that point. So a retest that converges with this 13 exponential moving average, what I call the control line. This is also representing a role reversal level as part of the SR flip logic. Okay, something that I promote as part of my mentor room. And it's essentially I conclude that this breakout of the SR came after a major markup that led me to believe that this would be a market that would be bought on weakness. So yeah, that was my idea, and one that could have been complemented by decoding the most probable cycles based off time by utilizing this cycle model builder or cycle scanner, as Lars calls it. Okay, and what's interesting is notice the huge convergence in multiple long-term periods through 321, 164 and 126, and that was happening around this period of the 2nd to 3rd week of May. So this exhibit essentially what it illustrates is that we were trading technicals in line with the ideal cyclical environment, because both 321 and 164 length each showed very strong amplitude alongside a very high accuracy rate, as the bar tail column indicates, which essentially is predicting previous turning points and how accurate the system has been in picking those points. And now if we throw into the mix at 126, then that only strengthens these findings. All right, so with that being said, what we've seen ever since is that the Nasdaq Composite has appreciated over 2%. Sellers have been wiped out of the equation. We ended up with a very solid rotation back up, and key now is whether or not the price can poke its head above this 1.7 to 13,700 to 13,750. Okay, we really need to see that the price is going to be able to penetrate this huge level of support, used to be support and now resistance. Okay, so that's where we at in the Nasdaq at the moment. And I guess that as a final note, what this video really, the main purpose of it was to outline the importance of cycles in financial markets. If we're able to recognize the dominant cycle by combining both objective data analytics and a slight calibration to best fit the recent rhythmic patterns, then we're going to be able to project and better predict behavior into the future, as was the case in the Nasdaq 100, where technicals were screaming this is potentially a market that is going to be following the bullish side as the path of this resistance, and it was corroborated through time-based cycles by using this software by Lars Pontinen. So there you have it. This cyclicality in markets must, when combined with technicals, it really strengthens the notion of a potential directional bias that you may be wanting to play with higher odds of success. Alright, so hopefully you've enjoyed this video. If you have, please smash the like button, make some comments. You can reach out to me if you want to get more information regarding this topic in the Discord room. The link is down below. Until the next video, is bye from me. Cheers.